Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 29th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You see, the previous session here, price basically traded mostly range bound, had a little bit of upside here, fell back into the range a little bit, mostly digestive with an upward bias. Really, when you stitch together the last couple of days here, you're starting to pull away from the previous low, and you're starting to see price attempt to recover the 43.50 level. 43.50 very important here in the near term. You have a downward trending or downward sloping 8-period average right now, and this test into this zone will be very important here. This is about the spot where a failed new high could develop, and we could be looking at a rotation back down into the range. If we are going to follow through with strength, again, 43.50 is the key level here. You would push away from that level and begin to hold it as support. That could open up a bit of strength here back within the range. 44.56 could be the next target above. That's going to be your key range midpoint after a rejection of the key range low. So if it can push back through 43.50 with some juice, it opens up a 44.56 half test. Not over the next day or two, but perhaps over the next several days, we could be looking at a push into that zone if it can hold 43.50. Again, any rejection here could be a sell back down to new lows as this thing attempts a further expansion. So watching to see how it develops here off the 43.50 level. We do have pre-market economic data points coming out here very soon. Those pre-market data points include the core PCE price index, PCE price index, personal spending, retail inventories, and we also have Chicago PMI and Michigan consumer sentiment and expectations after the RTH open. So very active pre-market and post-RTH open with economic data that could open up some movement here ahead. So keep an eye on that 43.50. That's going to be the line to watch here for the ES. The NQ here, you'll see the NQ very bullish off of the 14.6 level. 14.6 is the level we were watching to begin the week. Mentioned that if we drop into that level could be a zone where a bounce could happen or a break. And in this case, we saw a bit of a bounce. We saw another similar bounce to last time here where we have a squat reversal. And then we pushed higher in the previous session here and held those gains for the most part. So not a bad reversal here off of these lows. Still a downtrending move coming into the top end of this resistance. 15K will be the level to watch here. If we reject it or fail at 15K, that could be a rotation back down within the range. Perhaps a test at 14.6 could lead to a break the next time around. So again, watching this zone very closely. If we do bounce and continue to move higher off 14.6, you have your 15,200, which is the key range midpoint, and maybe even the top of the range here as this thing continues to trade inside this key range right here. So watching 15K for early directional conviction. Looking at crude oil, this one's back up today, 1 1/3% after yesterday's sell-off, but it's right back in a zone where bears could look to defend. 93s, it just pushed into 93s. The previous session's midpoint, 93.21 here. Big time rejection of highs above 94. Price went into 95, pulled back, and dropped into the range. Look at these two huge days here. One big up day, one big rejection day. That's a higher high rejection at the 94 edge. We got the move we were expecting on a failed new low. So from this low to that high, that is a 7-point move on really a 3-day range basis. On a 5-day range basis, we were looking for 5 to 6 points, and we got about 7. So that's about right in line with what we were looking for. Just a little bit more to the upside. Very nice move. But now that we've capped that move off, are we now due for a pullback? If price cannot push through this midpoint here, 93.21s, that could open up a return back down. This pullback could be seen as a selling opportunity this morning for a rotation back toward 90 and 88 below on a near-term basis. And then do we swing back below that zone? If we swing back below it, can we find a strong low, snap back, and get ourselves a new key range? That could be in play up ahead. For right now, keeping an eye on 93 to 93.50. Bears want to defend that zone for a pullback into the range down below. Keeping in mind that this trend still remains quite bullish. Very, very strong, and the bulls have had control. So keep an eye on 93 here. If prices can't get back through that zone, perhaps we're going to pull back a bit more. Looking at gold now. Gold up about 0.4%, now below 1900 for the first time in a good long while. This market had been compressing here, chopping around the midpoint, the apex of that larger triangular pattern, eventually getting a downside break, taking 1950 offered and pushing down below 1900. We're now dropping away from that zone at the moment. You can see right here, lower value relationship heading into next month. This is the last trading day of the month and also the last trading day of the quarter. So we're also going to get new quarterly pivots for next week. We're going to get new monthly pivots and new weekly pivots all next week. So again, last day of the quarter, of the month, of the week. We roll over next week. Any pullback into the lower value relationship could be sold for a continuation down into 1830. 1830 will be the previous year's close, and that'll be break even for the year. We may even rotate a bit down into the 1800 to 1810 zone. So more downside price action could be ahead for gold. Any pullback here could be seen as a selling opportunity early next week. Lastly, taking a look here at the YM. YM with a bit of a bounce here. The 33,800 level is a big level to watch. You can see how price dropped into that zone and currently holding here inside day the previous session with a squat bar, trying through the highs at the moment. A bit of a box that is developed above the previous session's high right now. A failure back through 34K could open up a rotation downward of about 150 points, maybe a little bit more. Keeping an eye on the previous session's highs, these 2-day highs right there. A failure back below those highs opens up some weakness. If they can hold those highs, you may get a little bit of a stretch. 34.2 might be above. That is it for now. We'll see how this develops here heading into the rest of the session. Please be sure to like, share, and subscribe. Have a fantastic weekend, and I'll see you in the trading room. Take care.